Good day Forex trader. EURUSD Forex signal, rectangle formation ahead of NFPs. The pair will likely remain inside this channel today as investors wait for the first NFP data of the year. Bullish view. Buy the EURUSD pair and add a take profit at 1.1400. Add a stop loss at 1.1300. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1300 and a take profit at 1.1200. Add a stop loss at 1.1400. The EURUSD held steady even as an energy crisis in the European Union continued. The pair rose to 1.1345, which was the highest level since Tuesday this week. It has risen by about 0.63% from its lowest level this week. Europe energy crisis. European countries are going through a major energy crisis as gas prices jump. Average gas prices rose by more than 5% on Wednesday after rising by 10% on Monday and Tuesday. The surge in gas prices is mostly because of Russia, which has lowered the amount of gas that it ships in the European Union. Gas flows between Russia and Ukraine have been below normal this week. Also, the recent tensions between Russia and Western countries have pushed the former to use gas as leverage. Most importantly, Russia is concerned about a delay in approving the Nord Stream 2 project. As a result, many power companies in Europe are struggling. On Wednesday, RWE, a leading German energy producer, said that it had been affected by the volatility. Uniper managed to raise $11.3 billion from its parent company. The rising energy prices, coupled with the rising number of Omicron cases, mean that the bloc will have a slower recovery than other places. As a result, the European Central Bank, ECB, will find it difficult to increase interest rates. Analysts expect the bank to continue with its asset purchases program this year. The EURUSD pair also rose after the strong U.S. jobs data. According to ADP, the U.S. economy added about 800,000 jobs in December after adding 505,000 in the previous month. These numbers came 2 days ahead of the official non-farm payrolls, NFP, data. Later today, the pair will react to the latest U.S. initial jobless claims numbers and the ISM non-manufacturing PMI data. EURUSD forecast. The EURUSD pair tilted higher after the latest FOMC minutes. It is trading at 1.1345, which is slightly above the 25-day moving average. It has also risen above the 23.6% Fibonacci retracement level, while the MACD has moved above the neutral level. The pair is still between the horizontal channel that started forming on December 1st. It has moved above the ascending trend line that is shown in red and the support at 1.1270. Therefore, the pair will likely remain inside this channel today as investors wait for the first NFP data of the year. GBPUSD Forex signal, relentless rally to continue. The pair will likely keep rising as bulls target the key resistance level at 1.3700, which is along the 78.6% Fibonacci retracement level. Bullish view. Buy GBPUSD and set a take profit at 1.3700. Add a stop loss at 1.3492. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3530 and add a take profit at 1.3450. Add a stop loss at 1.3600. The GBPUSD rose to the highest level since November 9 as hopes of a more hawkish Bank of England, BO, rose. The pair has jumped by more than 3% from its lowest point in December. This makes sterling the best performing currency in the G10. More hawkish BO. The Bank of England surprised the market in December when it decided to hike interest rates by 0.25% amid a surge of Omicron cases in the UK. The bank judged that fighting inflation was a bigger priority considering that consumer prices have tilted upwards in the past few months. The strong performance of the GBPUSD is likely because analysts expect that the BO will embrace a more aggressive rate policy this year. Besides, the UK economy is expected to remain open since the symptoms of the Omicron variants are relatively mild. Recent data have shown that the UK economy is doing well. For example, on Tuesday, data published by Market revealed that the country's manufacturing PMI remained above the expansion zone of 50 in December. Later today, the company will publish the latest services PMI numbers that are expected to show that the PMI rose to 53.1 in December. The GBPUSD pair also rose even after the strong American jobs numbers. According to ADP, the private sector added more than 800,000 jobs in December after adding over 500,000 jobs in the previous month. This increase was better than the median estimate of 400,000. The data came a day after the Labor Department said that the U.S. had over 10 million vacancies. On Thursday, the U.S. will publish the latest initial jobless claims numbers. Economists expect the data will show that the claims rose slightly because of the Omicron variant. The official non-farm payrolls will come out on Friday. GBPUSD Forecast. The GBPUSD pair has been in a strong bullish trend. On the 4-hour chart, it has managed to move above the 25-period and 50-period moving averages. It also moved to the 61.8% Fibonacci retracement level while oscillators like the Relative Strength Index, RSI, have continued rising. The pair is also above the Ichimoku cloud. Therefore, the pair will likely keep rising as bulls target the key resistance level at 1.3700, which is along the 78.6% Fibonacci retracement level. This view will be invalidated if the price manages to decline below the key support at 1.3492. AUDUSD Forex signal, Australian dollar holds firm. The pair will likely keep rising as bulls target the next key resistance level at 0.7340, which is along the 61.8% Fibonacci retracement level. Bullish view. Buy the AUDUSD pair and set a take profit at 0.7350. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7240 and a take profit at 0.7150. Add a stop loss at 0.7300. The AUD-USD pair tilted upwards in the overnight session even after the latest surge of Australian COVID-19 cases. The pair is trading at 0.7265, which is about 1.1% above the lowest level this week. Australia COVID cases. The Australian government confirmed a record number of cases on Wednesday. The country had more than 47,000 cases on Tuesday, which was higher than the 7-day average of about 38,000. As a result, Australia has started seeing more hospitalizations in the past few days. The rising number of cases is in line with what other countries have reported recently. For example, the US is recording over 800,000 daily cases while the UK recorded over 200,000 cases. 1 in 15 people in the UK have the virus. Worse, China, Australia's biggest trading partner, is also seeing an uptick in cases. Because of its COVID-0 strategy, the country has announced a lockdown in Xi'an, a city with over 13 million people. This lockdown could have an impact on Australia's exports in the near term. There was no economic data published from Australia on Thursday. Therefore, it can be assumed that the current price action is mostly because of the US dollar. Indeed, the currency weakened across the board in the overnight session. The biggest mover for the AUD-USD will be the upcoming non-farm payroll, NFP, data that will come out on Friday. The numbers are expected to show that the country added over 400,000 jobs in December even as the COVID-19 cases kept rising. The unemployment rate is expected to keep falling as the labor market tightens. For example, initial jobless claims have declined to the lowest level since the pandemic started. Also, the number of vacancies across the country has jumped to over 10 million. AUD-USD Forecast. The AUD-USD pair has been in a strong upward trend recently. It has risen by over 2% from its December lows. As a result, the pair has risen above the 50% Fibonacci retracement level. It also rose above the 25-period moving average and the Ichimoku cloud. Oscillators like the Relative Strength Index, RSI, have also risen. Therefore, the pair will likely keep rising as bulls target the next key resistance level at 0.7340, which is along the 61.8% Fibonacci retracement level. This view will be invalidated if the price drops below the key support at 0.7230.